Hello, YouTube. You might have missed it, but the XLK, or a different way of measuring the NASDAQ, actually made a new marginal all-time high. So the question we're going to ask ourselves this weekend is whether or not this pattern can replicate on QQQ and on SPY, because we often track QQQ, but it's very important to understand what makes up these markets. And we're going to talk about the Magnificent Seven: Apple, Microsoft, Google, Amazon, Nvidia, Tesla, and Meta. Why? Because Goldman Sachs is telling us that for the first time in 2023, we are actively being asked by multiple clients if we think the S&P is now on track to close at a new all-time high. I am going with a yes on this one. So why exactly does this matter? Well, it matters because if we're looking at SPY versus RSP, or equal weight S&P 500 versus weighted S&P 500, to the same extent that we look at QQQ only. If we're only looking at QQQ, it just means we're missing part of the picture. So why is QQQ not at all-time highs quite yet? Well, that's because of the weighting that underlines it. Note here that QQQ is managed by Invesco, a separate company from XLK. So XLK is managed by Spider. So if this is confusing you, just hang with me for a few minutes, and I promise I will walk you through what all of this means and how we can be prepared for this week ahead as big tech earnings kick off. I'm going to ask you for a huge favor, please, and thank you, though. If you could, please consider smashing that thumbs up and subscribing to the channel. I would greatly appreciate that. And we're going to walk you through all these updates for the rest of the week, and we upload videos nearly every day. So one more thing I want to touch on before we go further here, too, is that this is just a template for how we can actually get to new all-time highs. So if we're only looking at QQQ and SPY, we might have missed that the new all-time high already happened. XLK does not hold as much weight in Amazon and Tesla. It's 50% Apple and Microsoft. So there's going to be rebalancings at the index level, meaning the NASDAQ 100 or NDX, because this one's not at all-time highs yet either. So as we think about these things, we want to ask ourselves if there are other markets which are currently in that new all-time high territory that we can look at as a template, because believe it or not, Europe, specifically Germany or the DAX, actually made a new all-time high. Not this month, not last month, but going back to May of 2023. So what do you guys think? Is America still better than Europe? Yes or no? Because if it is, why can't we go to all-time highs? So if we're going to go to all-time highs, we're going to talk about the Magnificent Seven. We're going to be kicking off earnings this week, specifically with Tesla and Netflix on Wednesday afternoon. That'll be very, very important for us. And specifically on Friday, we were told that the way the NASDAQ is going to get its makeover, or basically to rebalance. And I think that's largely what's going to drive the market this week. So that's what we're going to focus on. We'll look at some charts after. And if you have any questions, I would really encourage you to drop me a comment. I would really appreciate that. So when we look here, the 7 companies we just mentioned, or the Magnificent Seven, account for basically half of the index as of June 3rd. That's too much. Why? So what's a special rebalancing, which is what they're going to be doing? The tech-heavy index will undergo a special rebalance in a couple of weeks on June 24th. And why does that seem like a really, really odd date to do it? I'll tell you why. On July 25th and 26th, we have our FOMC meeting, or when the Fed decides. So on the 24th, we're going to get that rebalancing. 2 days later, the Fed meets. We'll see whether or not the extreme fear and greed, meaning extreme greed, is going to push higher above 83 specifically and go into, I don't know, like 85, 90, or if we're going to be selling the greed. Again, we buy fear, we sell greed. In the last year, a year ago, we were in fear, and man, was it a big, big turnaround. We're also going to look through and see what the expectations for every single one of these companies is, because they're all expecting beats this week. All right, so let's dive in a little bit deeper here. We're going to close out that quote, and we're going to go here to the way we want to think about this. The NASDAQ can rebalance the index outside of its normal quarterly schedule so that issuers with individual weightings that exceed 4.5% don't surpass a combined 48% of the entire index for the company's methodologies. What does that mean? Well, if we're currently at 51, they're going to be rebalancing it down to 48. It's not a huge amount, but 3% is still significant when we think about the dollars for these companies. Apple's worth $3 trillion, 2.999 specifically. Microsoft is worth 2.56. Google clocking in at 1.6. Amazon clocking in over a trillion. So like a trillion, it seems like a really big number, and 1% of a trillion is not nothing. So let's remind ourselves of that as we go forward here. All right, and as I briefly alluded to, Tesla and Netflix are going to officially kick off big tech earnings after the bell on Wednesday, and we've already heard from banks, but we're going to be paying attention to Morgan Stanley, Charles Schwab, Bank of America, First Bank, including regionals. We're going to have Goldman Sachs in there, and a whole bunch of other banks. So we're really getting into the thick of earnings now. But as we're looking for a preview from Tesla and Netflix, what is the expectation? Well, for Netflix, we're expecting 289 on EPS over the consensus of 282, or expecting a beat. They're reporting at 4 o'clock on the 19th. So again, please subscribe to the channel if you want us to update you all week and all year through all of these great reports. Tesla is going to be reporting on Wednesday as well at 4:05 and expecting 89 cents EPS over 82, which would imply a beat of about 8.9%. Tesla is also a really big wild card because they announced that they recently had that partnership with GM, with Ford, and Rivian for their charging network. That could lead to Tesla actually guiding up and leading to a little bit more euphoria going into the rest of big tech earnings, which could drive that fear and greed higher. So we want to ask ourselves, all right, so if Netflix and Tesla are expecting beats, what should the move be? Well, this is where things get a little interesting, because when we look here at Tesla, it's already up 137% into the year. Netflix is up by 48%. And arguably, these things have been gunning into earnings. So as we look here to Tesla on the monthly chart, whoa, that's a pretty big ram from about 160 up here to about 280. That's a meaningful rally in just over 2 months. So is it running too hard into earnings, or is Tesla going to deliver something magnificent to dub the Magnificent Seven and lead it to go to new all-time highs as well? Please make sure to drop me a comment. I appreciate all of your engagement. All right, now let's look at these big dogs in order. We got Apple expecting a 4-cent beat. Will it be enough? Are they going to guide higher? Those will be the questions. Microsoft expecting a beat of about 10 cents, 265 over 255. We're just focusing on the EPS here because that's all the data that we're given. We can look here to Google, 138 over 132. All right, Amazon, 40 cents over 34 cents. That's a pretty big beat. So 40 over 34 implies a 17% beat. As a reminder, that was the size of beat that NVIDIA delivered last report and that everyone got so excited about. Meta expecting a beat, and NVIDIA not yet giving us a number here as not available, but they are reporting later, basically a month and a half from today about 6 weeks from now, 7 weeks from now on August 23rd. So as we think about all of these big tech earnings, what it really comes down to is whether or not the bears got a little bit too pessimistic about growth. Because right now, as of July 10th, in our last revision about 5 days ago, Q2 GDP is coming in at 2.29%. So as far as now, there is no recession. So has the recession already happened? Well, we talked about that previously, going back to Q1 and Q2 of 2022, which I think is going to be debated as to whether or not it was a recession, because we had marginal growth at 0.3 and then a contraction. It was really close to that double quarter. And finally, as we're going here into earnings, well, we noticed that the short position was taking off by about half, from 400,000 contracts here to about 200, but it's really hovering, which means that these bears just won't relent. This is a massive bet against stocks, and I'm not sure how much more pain they can tolerate. They've been holding on to the short for over a year now, going back to June of 2022, when that Fed rate hike cycle began. And the reason why we're going to be particularly focused on big tech earnings is because we don't have that much economic data this week. We're going to look to the events that can really drive the market. We're going to get GDP out of China here on Sunday night. Whoa, that would be pretty good. If it comes in here at 7.3, that might signal some expansion for the China reopening. And again, some euphoria going into big tech earnings kicking off on Wednesday. Core retail sales are going to be watched as well. And we'll be watching for that CPI print coming out of Europe as well. But again, we're focused on America. Looking here to the PMI, or Philadelphia Fed Manufacturing Index, coming in less negative than before. So let's look and see what happens. These data points are important, but like I mentioned, I think the real focus is going to be on the Magnificent Seven. Are they magnificent today? Will they be magnificent tomorrow? Because, whoa, these gains are pretty impressive. So what I want to do now is actually just go through a couple of monthly charts because I think it's important for context that we understand where we're coming from versus where we're going. So we talked about this chart on SPY pretty extensively going into the end of June. And then after, what did we do? Well, we stopped going down, which we cracked this downtrend with. We're going up and we're over the previous monthly highs. What does that signal? It signals an expansion or hollow candles. How many in a row? 1, 2, 3, 4, 5. 5 candles in a row. Whoa, that's pretty interesting. Yes, it is very interesting. And the reason why it's interesting is because we noted here that we had 1, 2, 3, 4, 5 as we were going to that previous top bounce. So to make it really simple and as a really brief recap, we note that we have our previous all-time high. Here we come down to the 50-MA crash land bounce with 5 hollow candles, a little bit of indigestion, and then we go to new all-time highs. So that relative high we're looking at here signifies basically the pre-lockdown level in February of 2020. And I am saying this is similar to what we note here. 2 massive red candles take us down to the 50 and we bounce strongly off of it. 2 red candles take us down to the 50 and we bounce strongly off of it. We had that banking crisis somewhere in here, ultimately going sideways, and now we got those 5 candles back to back. So what I'll be watching for specifically is that if we're able to hold last month's high at 444, meaning can we maintain 445? And that'll be very important if we're going to go to new all-time highs, because if we note here on the 5th month, we close strong and then we start to reverse. So as we start to reverse, we just want to think about whether or not there were warning signs here. I think the answer is yes. And if we now look over here to the DAX as an additional template, we try to understand what happens when we actually hit resistance. So when we hit resistance here, we're going to take the previous all-time high. Let's use a magnet. Let's grab a horizontal ray, and we're going to snap the line to see exactly where that is. Previous tops here in November of 2021 and January of 2022, we got 16,285, 16,290. So let's slap it there on 16,290. Let's use our paintbrush, and we're going to note that in May, June, we formed higher highs. We went into new all-time highs in May and in June. But ultimately, we had a little bit of indigestion, as I noted before, too. So we hit that area, breach it by a little bit, come back down, consolidate, and now the DAX, if it can reclaim the roughly 16,300 area, it looks like it might just want to melt and go higher and higher and higher. As a reminder, rallies get easier or there is less friction as we get into new all-time high territory. Let's remind ourselves of what that can look like as we actually get to new all-time highs. We can do what NVIDIA did, where we just go up, 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 and we're going to go to full candles now, so it's a little bit easier to see. But I personally like the hollow candles because it just signifies where the expansion is continuing, meaning we're closing higher than the open of the candle. So I just want to go through that really fast here because do we even see a full candle here? No. I want to go to Apple for a moment. We can note here we have a full green candle. So we closed higher than the previous candle, but the full green candle just means that we're closing lower than we opened. So when we see a hollow candle, it means that we're closing higher than the previous candle. We're also closing higher than the open of the candle, which just means there is an expansion. That's the easiest way for me to try to explain that. And we've talked about this before. When we look here to, let me go back here to S&P. We're going to look at our weekly chart. And we've been talking about how the hollow candles signal the expansion is continuing and the lower lows are a warning. So last weekend we talked about, well, are we getting a big crash warning? Well, we clearly avoided that. We did not print a lower low. We have another hollow candle, which means more evidence we could be going to new all-time highs. Volume also looks pretty strong here too. So that's another good indicator for the bulls. So if we go here to Apple already a new all-time high. So that's looking pretty good. If we go back here to candles, we note that, all right, so Apple had to do a little bit of a march here going into its all-time high, backed off a little bit, announces the Vision Pro or that VR headset, and then makes it to new all-time highs and coming off a little bit off that area. As we noted, it's throttling the $3 trillion level, and I'm quite surprised it's actually hovering here. 190.70 is going to be exactly $3 trillion for Apple. It has always struggled, meaning going down at the previous trillion-dollar numbers, including 1 and 2 trillion. So that's what I'm watching closely here on Apple. But it is a new all-time high territory. So if it wants to do what Nvidia does, well, we just go up, 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 up. Right? That's the template we're looking for going into earnings. So now let's look over here to XLK and QQQ. We'll briefly look at the big tech, including Apple, Amazon, and all that good jazz, and then we'll go further. So as you note here, on XLK, we hit a new all-time high. 177.04 is the previous number. So far, we hit 178.07, which means a $1 new all-time high. $1, right? There's my beautiful handwriting. If you appreciate this beautiful writing, I encourage you to please smash a thumbs up and consider subscribing to the channel. Thank you again ahead of time. So as we hit it here, we're now backing off a little bit. And if we're only looking at one chart, like for XLK, well, it looks just like the DAX. New all-time high, but falling back below the previous candle. Why? Well, we just showed you that Apple's backing off. So XLK's weighting is very skewed towards Apple and Microsoft. So whatever those two do are going to move it. And that's why we're back below here. So technically a failed breakout as of right now, but in new all-time high territory. We looked at QQQ. Well, here's a story where it's a little bit different. And here we note that we have the all-time high, which we've not yet quite got to. We have a path to get there, but we are over the previous candle high. So that just signals the expansion is stronger right here, right now for these charts. Why? Because Apple and Microsoft are starting to go a little bit more sideways. We can note here that Apple's going, again, inside bar here, a little bit red on this month. We look at Microsoft, same thing, right? Made a new all-time high, but it's currently digesting versus names like Google, which are trying to leg up here, but not quite there yet. We look to a name like Amazon. Well, pretty strong move here in the last few months, right? Whoa, from May until now, that's a big, big move over at short-term price or that 50 MA. We look here to NVIDIA. Boom, right? Big booms going into boom count, baby. Whoop. Looking here at Meta, man, what an expansion from about 89 to 300 plus. That has been a beautiful, beautiful move. And then Tesla here in those last 2 months, big, massive power up. So that's where the strength comes from in QQQ. As we're looking here a little bit objectively, we want to keep in mind that there is resistance on these charts. So if Tesla does not manage to break back above this roughly $300 area, that could in hindsight look like a head and shoulders. So a head and shoulders usually leads to knees and toes or new lows to come. So like the stage is really set to see what's going to happen with these big stocks. And that's pretty much it. Now we're going to look over here to a couple of really brief weekly charts because I want to make sure that we get a good grasp on what rebalancing means and what exactly can look different when we're looking at one ETF versus another, like QQQ versus XLK or SPY versus, say, RSP. And this will be important because I want you to look at one number right here. Sorry, one moment in time. For us, that's 432, and it goes back to our August 15th high where we claimed it. We got over it. We backed off and then bounced off of it. If we look over here to RSP now, or equal weight S&P 500, which just means that big tech does not dominate, everything's equal. While we're battling for that area right now, we got 153.10 as that top, and now we've hit 153.2, which means 10 cents over that previous top, but it's not yet been claimed. So again, potentially, it's a really small one, but there is a head and shoulders here too. Volume is incredibly strong as that cash comes off the sidelines, but we need to see it actually manifest a new all-time high. And then finally, just one more quick chart here for us to look at is going to be the dollar, because the dollar has been driving a lot of the gains on the broader market. Note the weekly decline here at about negative 2.26%. Now let's look to SPY, a gain of 2.4%. So if you're not familiar with this, when the dollar goes down, it just means stocks usually go up. This is not only going to be good for stocks in general, it'll be good for earnings season. Why? Because as companies like Netflix, Tesla, Apple, Microsoft sell in other countries, but they report in US dollars, it's going to artificially boost their earnings in US dollars because the foreign currencies are now going to appear like they're giving a bigger boost. So the same pattern here, that head and shoulders, knees and toes, made the dollar crack $100 and close below it. That's like pretty meaningful support. So is there more losses in store for the dollar or more gains for the broader market? That'll be a very important question. With that said, if you want to see the bearish narrative we laid out last weekend, or what exactly would cause a stock market crash, please click on that on the left-hand side now. If not, thank you so much for watching, and we look forward to seeing you on the weekly videos this week. Thank you again.